Welcome to AYP's webinar series on debunking year-end tax calculation myths. I am Ruth, your facilitator for today. Today's topic is debunking year-end tax calculation myths in Vietnam. The webinar will be cut into 5 parts. The basis of Vietnam's year-end tax, calculations, what's changing for this year, how to stay compliant, and recommendations. Before we move on to today's presentation, I would like to clear up some housekeeping issues quickly. As a matter of introduction, this webinar series has been prepared by AYP Group, a HR tech and services company with its headquarters in Singapore. We are well positioned with a regional presence that continues to grow in the ASEAN region, particularly across Malaysia, Thailand, Indonesia, Philippines, Vietnam, and Hong Kong. Moving on, as a disclaimer, this webinar series is intended to share with our audience some basic knowledge on year-end tax calculations and to clear up any doubts they may have. It is not intended to convey any professional advice. You may, however, contact AYP Group directly if you are looking for more in-depth information or tailored advice for your needs. As today's focus is on year-end taxes, we will avoid sidetracking into unrelated HR issues. At the end of the session, we will have a short Q&A. Please use the Q&A feature at any time during this webinar session to ask your questions and like the questions you want to hear the answers to, so that the most popular ones appear at the top. You do not have to wait until the end of the presentation to ask questions. Recordings of the webinar will be made available after the session is over, and if anyone is experiencing any technical difficulties during the webinar, please do drop us a note via the chat function. So without further ado, our presentation for today has been prepared by none other than our Vietnam team. Our speaker is Yen, who is the Assistant Country Manager of AYP Vietnam. Yen is responsible for developing strong partnerships with clients and enabling them to expand their business throughout the country. Without further ado, I will hand this time over to Yen to give you today's presentation. Thank you.
Yen will be a presenter. I'm in charge of PO, payroll, and HR services in Vietnam. Thank you for your attendance today. So as you know, we are AYP Group HR Tech and Service provide PO, payroll, and HR system in Southeast Asia. Today I'm here to talk about the year-end tax in Vietnam and help you understand more about year tax annualization. All right, in this webinar, we have 5 highlights to share with you. First, this is basic of Vietnam year-end tax. Second, the calculations. Third, what changes for this year. 4, stay compliant. And the last one, recommendation. All right, let's start with basic of Vietnam year-end tax. So we can see the timeline year-end tax. The period for tax reporting is from January to December of fiscal year. When to prepare, we should start from January to the beginning of this year. When to submit, the deadline for submission of annual tax finalization dossier is the 90 days from the end of the calendar year or fiscal year. The last one, submit to who? We should submit online to the tax authorities who manage company tax code. And find out who need to pay personal income tax. The employees having income from salary or wage is only required to pay personal income tax when the total income is more than 11 mil VND per month. And after deduction 10.5% of social medical, health, and employment insurance if there's no dependent. But if there is one dependent, the income must be more than 15.4 mil VND per month. Next, we go to the calculation. And we'll focus on the tax rate in Vietnam. So the questions is, what are the current income tax rate for residents and non-residents in Vietnam? You know, actually, this is a frequently asked question. And the following unified progressive tax rates are applicable to the Vietnamese and foreign nationals. You can see in the table, if your assessable income is up to 5 mil VND per month, you will apply tax rate 5%. And if your assessable income is over 5 mil to 10 mil VND per month, you will apply tax rate 15%. And at the same time, you will apply tax rate 15% if your assessable income is over 10 mil to 18 mil VND per month. Similarly, the tax rate will increase gradually, and maximum is 35% if your assessable income is over 18 mil. For more information, you may visit this link as below, home.kbmg vietnamincometax.html. Next, let's find out and understand more about the income tax for local and for foreigner. So as a rule, more types of remunerations or certain benefits in kind earned by an individual from employment in Vietnam are generally taxable regardless of where it paid. So income tax for locals and for foreigners, there are salary, wages, and items in the nature of salary and wages. Allowances including living allowances receivable by employee, thus bonus or any kind of bonus, incentives, seniority bonus, monetary or non-monetary bonuses, including bonus in form of stocks. Other monetary or non-monetary benefits than salary to which an employee is entitled and which are paid to or on behalf of the employees by the employer. And the last one, this is the welfare, like wedding, newborn, hospitalization, annual leave payment, tax lucky money, meal allowance is over 730K per month, and uniform allowance is over 417K per month, overtime hours from 201 hours per year, and lucky prize. And next is the tax-exempt income for local and for foreigners. As you know, employment income which is exempt from personal income tax based on either the current tax regulations or the practice of the tax authorities in Vietnam, including the following. The income being part of overtime or night shift, which is higher than a normal working hour salary, missed meal, lunch allowances, uniform allowances, and per diem, stationery, and telephone, which are in line with certain regulations or company policies. For example, like meal allowances is less than 330K per month, and uniform 417K per month. Allowances for people haven't contributed to the revolutionary cause in accordance with the law on preferential treatment for such people, welfare, example like marriage, death, affairs, compensation for occupational accidents, severance allowance, jobless allowance, allowance compensated to the employees by the government when the employees got labor accident, compensation from life insurance, health insurance received from insurer will be exempt from personal income tax, and donation to the employee. Then let's find out what are the year-end tax changes for 2020 in Vietnam for personal income tax. In this year, tax government has adjusted the level of personal and family dependent deduction allowances to reduce personal income tax for employees. So you can see in the table, till June 2020, personal deduction is 9 million VND and family deduction is 3.6 mil VND. But from July 2020 onwards, personal deduction is increased to 11 mil VND and family deductions is increased to 4.4 mil VND. However, we can also adjust the level of the personal and family dependent deduction allowances backward from January 2020, when we processed personal income tax finalization report. And here's the example for the payslip when there are any changes to the law regarding salary, tax, and insurance. Our just balance system updates quickly. Below, you can see this is the payslip example that I shared before. You can see before adjust the level of personal and family dependent deduction allowances. Employee pay PAC about 41K VND, but after adjust the level of personal and family dependent deduction allowances, the employees pay $0 VND for PAT. Next day compliance, what to look out for processing year-end tax. Personal income tax is the tax that in the fiscal year, if there is a salary expenses, the enterprise must make a final settlement. Below are the points to note when we do the finalized personal income tax. The first one, we should focus, this is the time of determination of income subject to PAT. The time of determination of income for the personal income tax calculation is the time when the organization or individual pays income to the taxpayer. For example, December 2019, salary is paid in January 2020 is included in taxable income of January 2020 payroll cycle. The second is the personal income tax calculation method. Calculated according to the partially progressive schedule for the employees with the labor contracts from 3 months or more for local and for foreigners. 10% deduction for the employees who do not sign a contract or sign a labor contract of less than 3 months, with a total income payment of 2 mil VND per time or more. 20% deduction for non-resident individuals, usually applied for the foreigners, is determined by taxable income from salaries and wages at the rate of 20%. And the first focus on the forms of PAT settlements. You can see that the individuals authorizing the tax settlement through income payment organization. For example, like for those who working for 12 months per year and less than 12 months, from 1st of January to 31st December 2020, and they do not have other income sources, for example, like income from sales or house rental, or be in employment with another company beside current company that the employee is working during 2020. The employee should sign and submit the letter of authorization. Individuals make tax settlement directly to the tax office in case for those who work in less than 12 months per year. And for those who have other income sources, like the same income for sales and house rental and employment, be in employment with another company, employees are required to settle the VAT finalization direct to the tax department on their own edit. And the last one we should focus, this is the deadline for submission of VAT finalization. Income paid in organizations and individual required to declare tax finalization shall submit tax finalization report within 90 days from the end of the calendar year. And in case of the resident being a foreigner, terminate his or her employment contract in Vietnam, but before leaving, he or she must go through tax finalization procedures with the tax agency. The deadlines of the submitting the personal income tax finalization reports at is no longer than 45 days from the day of the individual exit. What happens if not compliant, not correct, or submit not in time? What are the consequences? If the enterprise does not submit the annual tax finalization declarations or late submission of the annual tax finalization declaration, it will be filed as follows. You can see that if there are 10 new circumstances, the minimum fine level must not be lower than 2 mil VND, or there is an increase in circumstance. If the enterprise does not submit a tax declarations report but does not incur a payable tax amount, a fine will be 3.5 mil VND. And the last one, this is a heavier case. The maximum fine level shall not exceed 5 mil VND. Next, what could you do? Actually, you can outsource to a professional payroll management partner, and either you can consider getting on cloud as a HR and payroll system. In this context of increasingly difficulty economic conditions and fear competitions, many businesses are struggling to find the right direction for maximum 7 while ensuring high quality and efficiency of work. Outsource is the solution favored by many businesses today. The core business core and offering supportive high-risk operation to entities whose outside expertise are the coupling of this solution. When outsourcing personnel, businesses will have many benefits. Now we will talk about the advantage of outsourcing payroll to a vendor. The first is the cost savings. The cost of outsourcing service is often lower than the cost of building a team in the enterprise. If they self-maintain their staff, businesses will have to pay additional personal income tax, social insurance, and health insurance for their employees, and more like they will offer the private insurance for their employees. The second, this is the saving space and cost of working facilities. Building a structure of human resources to work fully in the business requires you to have enough office space, working equipment, for example, like table, chair, computers, fax machine, stationery, etc. With the solution of outsourcing, you only need to invest a part of this facility. The third one, ensuring uninterrupted work. The full-time employees, have the right to take leave or sick leave, while businesses need to ensure continuous work. Using outsourced service ensure that the job is always run without interruption. The fourth is time saving and quality assurance. The form of the outsourcing saves you a lot of time and ensure the quality of the delivery results. And the last one is the quick and compliant to the Vietnam law related to tax and the labor law. Next, we will talk about the advantage of subscribing to HRMS. Payroll processing throughout the year involves withholding the correct amount from the employees' pay, as well as calculating employer liabilities and submitting the payment to state and local collection agencies at mandate time. Automated payroll software such as HRMS Payroll can make it easy for your organizations. So you can see that the advantage like save time by automatically accessing relevant information from an integrated human resources management system, HRMS, or timekeeping system, and reduce paperwork. central storage and provide a bird's eye view. Then always updated with legal change. The next one is ready-made tax form for filling, and the last one is produce accurate payroll by providing calculation based on up-to-date tax table, and option to automate payouts, calculate taxes, and enroll in benefits. So, did you know 43% of respondents find engaging HMS solution improve information availability? Next, we will go to the key findings and trends. According to the payroll operation survey summary results of Deloitte, so we can see the top payroll-related challenges or risks identified by respondents with globally mobile employees and expatriates. We can see that 49% of our year-end tax processing, 49% determining tax withholding application, 46% reporting of local payroll taxable income, 36% about accuracy of source data, 23% cross-country chargings of payroll costs, and 13% about immigration and visa issue. So based on the survey, we can see global communities brought tax compliance challenges in three areas. First, this is the employee mobility and determination tax withholdings. The second, this is reporting of the local payroll taxable income. And the last one, this is the year-end processing. Because of the challenges listed above, the best solution for the businesses using HR software online payroll self-service functionalities is widely used, with 83% of the respondents offering the ability to view pay statement online. All right, I have completed the presentation. Thank you for listening and joining us today again. Please contact us if you have any question or interested about a year-end tax. We are willing to advise and guide you quickly at email address vnh@iyb-group.com or hotline 8428 2220 or you can visit our website at iyb-group.com or justtalent.com/vi/. And please register and attend our upcoming webinars episode if you would like to understand other countries here in tax. Thailand, 12th November, time 4 p.m. Singapore, 17 November, 4 p.m. Indonesia, 19 November, the same time 4 p.m. Philippines, 24 November, 4 p.m. and Malaysia, 26 November, 4 p.m. Have a nice day.
Thank you for your informative presentation, Yen. I'm sure we all have learned something valuable. We had a few questions come in during the presentation, which we have yet to answer, and you may continue to send your questions in as we are answering questions at the moment. Therefore, for the next part of the session, we will be both taking and answering any questions you may have. As you may note, we have already answered some questions asked during the presentation in our attempt to answer as many questions as possible. But we have kept some general questions that we thought our audience may benefit from learning the answers to. So first of all, how many dependents are there when a taxpayer registers?
Thank you for the question. To answer how many dependents is taxpayer registered, so under the guidance in Circular 111, when registered dependents, actually there is no limit on the numbers of dependents as long as the dependent conditions are met. However, but each dependent is entitled one-time deduction only. If more than one taxpayer share a foster dependent, the taxpayer makes an arrangement to apply for family deduction on one taxpayer.
Okay, thank you, Ian. The next question would be, if the employee works in two different places, where should they submit the PIT finalization return?
Um, when the employees they work in both places in the year, for example, if in 2020 you work in the company A for 6 months, and then the last 6 months you work for the company B, the employee they will file the BAT finalization file where the deduction of the employee's family circumstances is taken.
Okay, next one would be, why have PIT withheld monthly, but still have them recalculated at the end of each year?
Mm, the purpose of the year-end tax finalization is to determine refund or additional payments. Although the deduction is made monthly, but at the end of the year, it is still necessary to recalculate in order to avoid some mistakes. In addition, the monthly income of the employees may increase or decrease, possibly increase due to the salary increase or bonus. So the tax finalization times is to calculate the average. Those units that have fully deducted each month, the end of the year do not deduct much. But for people with the income from many places, it must be reconsidered. So if the monthly deduction is made, there may be no additional payment at the end of the year or even for refund. Those have extraordinary income than act of the whole year. But according to the progressive tax rates, that's if 5 or 10% higher monthly, they must pay more. Yeah.
Okay, thank you, Ian. The next question would be, if the employee moves location for work, how will the tax finalization process be like for them?
For this question, if the employee they move to work, um, or they change jobs in the same unit together, they can authorize the new unit that they are working. But if they work in two different units, you must go to settle BAT finalization by yourself directly to the tax authority.
Okay, moving on to our next question. If the taxpayer's tax settlement is delayed, how will this be handled overall?
So if the taxpayer tax settlements is delayed, uh, if they get tax refund, there is no penalty. But if the amount of the tax payable is increased, but the settlement is delayed, the administrative penalties will be imposed.
Okay, and are there any tax compliance requirements for foreigners when they leave Vietnam?
For foreigner, when they live in Vietnam, the employee tax finalization return for the income and of to the termination of employment contracts dates must be filed within 45 days after their departure. A foreigner who failed to settle their personal income tax liabilities could be prevented from leaving the country. In addition, any tax shortfalls, but a tax finalization return should be settled by the same deadline.
Okay, and what if the assignees come back from a trip after their residency has been terminated?
Um, if their return may affect the residency status, does it change their status from non-resident to resident, then they are required to revise their tax returns based on worldwide income. In addition, if they travel to work in Vietnam, they may also have an additional Vietnamese tax exposure in relation to the income earned during the trip back.
Okay, and will the taxation be triggered regardless of whether or not the board member is physically present in Vietnam?
Non-resident are taxed even in case they are not present in Vietnam.
Okay, so the next question would be, declaring and finalizing personal income tax for resident individuals earning income from business, salary, or wages in case the first calendar year is less than 183 days, but calculated for 12 consecutive months from the first day present in Vietnam, is over 183 days. How is this done?
For this question, the tax declarations for resident individuals having income from businesses, income from salaries or wages, in case the number of the days present in Vietnam in the first calendar year is less than 183 days, but calculated in 12 months continuously from the first day of present in Vietnam for 183 days or more. So when we do the VAT finalization report for this case, in the first tax year, we make and submit the tax finalization by the 90 days from the 12 consecutive month days. For example, if you are the foreigner, you enter Vietnam in June 2020. So when will you have to apply the first VAT first year? You have to wait until May next year, and you apply your first tax year's report. And then the second tax years, you still make and submit the tax finalization by the 90 days from the end of the calendar year. And the tax amount payable in the second years will be deducted from the tax paid in the first year, corresponding to the same period of the second tax years.
Okay, thank you, Yen. Another viewer wants to know that what benefits will one receive if they have a tax code in Vietnam?
The benefit employee they will receive when they have a tax code, for example, like they can calculate it from family deduction for dependents, and they will get the VAT refund if overpaid.
Okay, and if an employee happens to have an excess of tax after finalizing everything, how will this be refunded to them?
Um, so if the employee they have overpay amount, is meaning that they have the refund VAT when we finish the VAT finalization report. The company will offset in monthly VAT payment of April payroll cycle 2020 for the employee. In this case, the employees they are still working at the company. So if the employee they have unpaid amount, the company will deduct more personal income tax from employee net salary to pay tax authority before 30 March.
Okay, thank you, Yen. So, is salary earned from working abroad? Sorry, can representative officers be subject to PIT finalization?
Yes, if the representative office is responsible for paying income to the employees, it must declare and finalize personal income tax also.
Okay, and how about visa expenses? Are they paid by the company for foreign workers?
For the visa expenses, in this case, the expenses for obtaining like visa or temporary resident card for foreigner workers paid by the company on behalf of the employees. These amounts are included in taxable income from salary, wage, and tax declarations. So VAT according to regulation.
Okay, how about the cost of service contracts to apply for a work permit if one's a foreigner?
For the work permit, when the company hiring foreigner workers, the companies they have responsible for applying work permit. So the cost of work permits paid by the company is not included in the employee's income tax subject to the personal income tax.
Okay, and are employment benefits also taxable?
No, unemployment benefits are not taxable because this is benefits you receive from the government.
Okay, but then, so what type of benefits would be taxable in Vietnam?
Sorry again, please.
What type of benefits would be taxable in Vietnam?
Um, what is the, okay, can you,
What type of benefits would be taxable in Vietnam?
the taxable benefits in Vietnam is including like salary and wages or all the allowance that I share before in the presentation. Yeah.
Okay, so if one realizes that they made a mistake only after filing for tax, what should they do?
Actually, you can resubmit personal income tax finalization report again if you realize that you make a mistake.
Okay, thank you for your time, Yen, and thank you to all the attendees for their questions. We have come to the end of today's session. For the questions that are still unanswered, please rest assured as we will categorize the questions and follow up with an email later on. You may also contact us directly at sales@justtalent.com should you have any additional questions. Thank you for sitting through our session, and we hope that it has given you a clearer perspective on year-end tax calculations. If you enjoyed our session today, please feel free to join our next webinar session for this series. Thank you, and we look forward to seeing you there.